Good afternoon and welcome to Biztech's Personal Finance Show. Now, today we explore the topic of do-it-yourself financial planning. Now, here to give us insights is Laurent Bertrand. He's the CEO and co-founder of Better Tradeoff, a fintech startup that democratizes financial planning by providing consumers with accessible and comprehensible advice. Laurent, welcome to the show.
Good afternoon, Brian. Thank you for having me.
Now, Laurent, before we start, really, could you just give us an overview of what Better Tradeoff does in detail?
So as a company, what we do is very simple. We help consumers answer the big question about their finance. How much do I need? What can I do? What if things go wrong? And more importantly, what should I trust the advice and kind of recommendation? On the industry side, it's difficult to get people to understand what they can do, and it means that a lot of people today don't have access to solid, sound financial advice so that they can do something about their life, and most importantly, take the right decision for their long-term future. And the sad truth is a lot of people are underserved, underinvested, underprotected because they don't know. And so what we do is to bring the people who need advice and who need this to help for making decisions, and the one who are providing the advice and the product, and make it easy for both of them. So you as a consumer, you understand what's going on, it's transparent. Should I buy another property? Should I invest? What's going on? How do I retire and send the kids to college and still enjoy my life? And on the other side is I have all those products, but not everybody is buying them because they don't know if it's really what they need. And it's kind of complicated. It's done today, but it's very manual, very labor intensive. And it means most people spend time on admin and looking for new clients rather than servicing them. And that's what we bring in a nutshell.
Okay, now, you were a senior person in wealth management at UBS. What inspired you to set this up, and how long has the journey been?
So, as you said, yes, I'm an industry insider. I know what it takes to operate on a large scale in multiple countries, not only Singapore, in the region. And so what we discover is that there was a gap in terms of what the industry is doing, providing great product and services, and what the consumer wants. So if you're super wealthy, hundreds of millions of dollars, you don't have a prime of how much do I need for retirement. But most of us, even for people who are very wealthy, have an issue with what is the right amount? What can I do? How does it make a difference? How do I compare transparently? And how do I make sure that if things go wrong, I'm protected? And what's the level? And just to illustrate a question is how much you need to protect your family is 4 times your salary. That's a standard answer. But in reality, it depends. You're 25 single, you're 35 married, and you're 45 with kids. Your needs are very different. So that's why it inspired us, because there was a big need in the market. It has been tried many times over, so it's not something new, but the execution was difficult, and we felt that technology and data would allow you to solve that in a much more efficient, much more elegant. So we wanted to democratize, if you want, what the most wealthy clients could get access to everyone, and bring wealth to the masses.
Now, I want walk us through some of the key your key secret sauce of Better Tradeoff in terms of technology.
In terms of technology, is the first thing is architecture and design. You have to imagine tax, social security, so CPF in Singapore, MPF in Hong Kong, Pillar 1, 2, 3 in Switzerland. It's about property. It's about how much you spend when you're 20 and 60, not the same thing. When you're single and a family, it's about bringing it together in a way which is coherent and bringing the complexity into a simple journey so it's easy for you to understand. So what you want is something that people say, oh, I get it, yet all the complexity is taken care of so that the answers are relevant and accurate. So that's the first secret sauce. The second secret sauce is we've always been super focused about the consumer experience. So our first concern is me as a consumer, irrespective my background, my education, I should find the answer to my question in an intuitive, easy to understand path. And when you do that, it makes the work of the institution, of the advisor much easier. And the last part is, yes, in the team and the people who brought as a deep tech experience and not just a wealth or life insurance experience. So we brought the tech to really facilitate that and enable a very scalable solution. So we are a Singapore-based company with global ambition. And that's what the tech enabled us. So the secret sauce is there. You can look at how it works. replicating it is very difficult. And I guess that's one reason why if there is a lot of people doing things, we are best in class right now with an order of magnitude in terms of impact and experience.
Okay, and how do you make money? What is your business model, and what's the value proposition for using you if I'm an individual?
But it's very simple. Once people are able to understand their need and suddenly they know that there is a solution to their situation, which is hyper-personalized if you want, that means in the end, you buying more products. Okay. So as I was saying, a lot of people are underprotected. If I ask you, do you know how much you need to protect your family in case something happens? Most of us are going to say, not really. Now you know, and now you can do it. So the result is you as a consumer, better served. You as an industry, you sell more. So we're typically SaaS model where if you're a large bank like Standard Chartered or Zurich as an insurer, who are our clients and it's official and deploy, this is a SaaS model. So there is a bit of money that they have to pay for a project, and then they pay us per user because it brings them, they deliver a superior service to their clients, which convert in sales. So everybody's happy. You have finally the plan you need to live a better life, and they sell more products.
Okay, Laurent, from your execution so far, have you noticed the difference between your clients in terms of the younger generation and the older generation? Because I would think that a product like yours would be more easily adopted by the younger generation.
So there are some differences, obviously. There are differences in experience, obviously, and expectation. You don't have the same means. So obvious demographics-driven kind of differences. What we observe is there's a bit more activity and exploration from the younger crowd. So we reach a very broad range of users. There is a sweet spot between 35 to 55, 60. I think that's where we see a lot. But we also have young people who are literally learning. And I think that the common attribute around all of them is answering my question, understanding the consequences, because, oh, what I do now have a long-term consequences. And obviously, when you're 20, you have much more time, even if you have less money. And what is interesting also is that once you get the answer to the question, you have the conviction to act. And for me, what I see is for the young generation, they tend to explore much more. And maybe because at this point of time, you're not clear about what you want, or maybe you have more option if you want. I'm still not married, so should I get married now? Should I get married later? So that's one thing that once you're married, you're probably not going to explore. But overall, what is interesting is there might be a view that the younger generation are not as engaged with planning and looking at what's happening. And I don't know if it's a COVID-19 effect, but what I see is a lot of young people are planning also. So the view that because you're young, you're careless is probably not true. And so
is that, Laurent, also a function of the fact that suddenly technology, as you have said earlier in the interview as well, democratized investing? So essentially, you have a plethora of options, from trading apps to robo-advisor to cryptocurrency exchanges, which then has given young people, suddenly it's opened up a different world for them. You have teenagers now talking about investing in cryptocurrency.
Yes, and you're absolutely right. And so there may be a bit more willingness to venture into new trades when you're a bit younger. But what I see is the interest is there from everybody. The issue nowadays is not really about having products to help you. There's plenty of them. It's a noise around what is right for me. So should I take crypto or not? Is it relevant? And this is what we were trying to do, is to bring people a context of their life so that when you explore, should I buy a unit trust, should I buy property, or should I go into crypto? I understand what it means for me. And I think that for most people, especially the young, there is a willingness to try, but there's still a request, which is, how is this helping me? Is this really making a difference? Or am I taking a risk which is inconsiderate? Because if I gamble everything into one stock and the stock doesn't go well, that's probably not a good idea. And so at the end of the day, this is what we're trying to help with, is to say, look, there is a lot of noise, there is a lot of offerings, a lot of exciting stuff coming in the market, and not only in the investment. It can come on the protection, on the lending, different places. But how do I make sense of all of it in a way which is I understand and I can trust? And that's kind of what we bring to the market. And that's why the bank insurance advisor finding useful because he helps clients to make a decision. He helps people who are listening to it. Should I buy property? Should I invest? Should I go in crypto? Those are good questions, but they have to be put into the context of your life.
And also one of the things is, and Laurent, before as part of research for this interview, I actually went and tried your product and put in some scenarios where I actually ran out of money just before post-retirement. So I put a scenario where I would live till 85 years old, but I ran out of money at 75. So I thought that that was quite an interesting exercise to do it on your own, because basically then it's a wake-up call. So I put in scenarios which were silly scenarios that were not my scenario. But if somebody actually put in a scenario like that, that would be an amazing wake-up call.
I mean, I'm so glad that you tried at first, and I would encourage everyone to try. But I'm also so glad that you achieve one of where we're trying to do is financial literacy, not in the sense of explaining the concept. Yes, we do, but most importantly, realizing that maybe working hard and saving is not good enough. Okay, and even if it was good enough, you're leaving a lot of money on the plate. Question, but what if I lose money with my investment? There's a risk. Yeah, but if you invest on the long term, that's a different story. And that's really where we wanted to have is people realizing what it means for you. And oh gosh, I don't have enough money until I retire. So if you were asking about the younger generation, one of the concerns they have, and you can look at studies which has been done not only by us, we see it in the usage, but one of the concerns is, will I have enough money to retire and still take care of my parents? And you know, a lot of people might be like what you described. Oh gosh, I don't have enough. So the bad news is you might not be aware. The good news is, even if the answer is I don't have enough, you can take action about it. I believe that when we look at the numbers in Singapore and in Malaysia and in the other countries where we are deployed and we have seen the number of the users, it's very simple. The foundations are not that bad. It's mostly you have to take action now so that you achieve security and the goals you have set for yourself. And so you might not have enough money until 73, especially if you're not investing. But the good news, at our age, is still 50 years of investment until you get 85. And so that's the beauty of the solution is show you not only what's your situation, but what you can do about it.
So Laura, let's zoom in on the two markets that you talked about, Singapore and Malaysia. One of the characteristics of middle class people and upwards, and particularly, is the very high concentration of property as part of their overall wealth. Now, from a financial planning standpoint, isn't that a very poor strategy? Because property is a very illiquid asset.
It's a great question. So we have to differentiate two cases. You own property, owner-occupier. I buy my property, I live in my property. You have two benefits. Property price goes up over time, like inflation or more, it depends on the market. But very important, you are not paying a rent when you don't have a salary, which means when you retire or financially independent. So this lack of having to pay for rent is a huge benefit of your assets, because now you have the occupation and you don't have to pay for it. If you're renting, you're going to end up paying for your rent until the end of your life, which is probably 30 or 40 more years. And that's a lot of money. If you look at the need for cash at retirement, half of it, most probably for the middle class, is going to be, I need to pay for my rent. That's huge. If you add up the numbers, it's massive. So if you do that, having a property is a good investment, not only because it goes up, but because you forego the cost of rental after a while, once you have paid your mortgage. And the rates are pretty low right now. Now, if you buy a second property, and if you want to increase the property and go through the property later, and we all have done it, my parents have done it, they're entrepreneurs, but they also bought property. Was it good then? It was good. Was it concentrated? Properly. Could they have done better? But that's the beauty of a solution like us. What if I buy a property? What if I buy unit trust? And I can share with you that this is an example that happened with our clients, banking clients, where their customer went and said, I want to buy another property. It's a good investment. And then realized they will be asset rich, but cash poor. And they would not be able to be retiring or financial free as early as they thought. And then they realized that the down payment could have been invested in unit trust. And then they reach the kind of freedom, financial freedom they wanted to do much earlier than retirement age. And without the solution, it would have been very complicated to look at it because you have tax, you have CPF usage, and so on forth. A lot of things that you need to consider to make it right. So to answer your question, property is not wrong per se, but it really depends on what you want to do. And absolutely, a lot of people are way too concentrated because that's an illiquid asset. If you need it and you need to sell, you might not be able to sell. If the market goes down because things like COVID happen, might be difficult to get a job. And at the time where you need to sell it, you won't be able to sell it because everybody's trying to sell at the same time. So that's the part which I think using a solution to explore the option is quite important, so you can make a decision which is the right one for you.
Yeah, and I think, Laurent, again, me going through the exercise, I think the whole idea that as an individual you can do scenario planning is a very, very empowering thing that the solution provides, because you can do your what if scenarios and really help you with your decision making.
Yep. I mean, you spot on.
Now, Laurent, I want to ask you in terms of as we wrap up this conversation, what are some of from a portfolio allocation strategy, what would you recommend today for people, for example, anywhere between 35 to 45, and then after that, again, as they are going older to 55, in terms of how they would allocate their assets?
So I love this question because that's always the same question. And when I was to be at UBS, the question is, do you have a hot tip? What is the stock I should buy? and I you don't want to know how many times I get a conversation. So first, I'm not an advisor, but what I can tell you is a better question is, by when do you need the money? I need the money in 2 years. I need a down payment for my house. Don't gamble it. You cannot afford to lose it. I need the money in 15 years. My kid is 5-year-old. They need to go to college. Excellent. Do NS and then do college. 15 years from now. Oh, no, 15 years of time. And you have products which, depending on how comfortable you are with, maybe I might not be exactly there. You have capital guaranteed, so save and protect, usual on demand, or you have an investment with a portfolio. And what really matters is a time horizon. Because if you think of it, if you take the SP 500, which is one of the classical big US market, it grows over time, and you look at the kind of risk take, if your horizon is 3 years, wow, that's pretty risky. In 1 year, you can lose 30%. It has happened just last year. It went down 30%. And now it's like when it happens and you see this in the news and say, oh, I'm going to sell. So basically what you do is buy high, sell low. And so that's your psychology. That's why I'm saying if you have a time horizon and it's very large, then you can take risks. So if you're 35, and let's take the example of I want to retire when I'm 60, which is not 65 like the government, or even 55. You have 20 years where your money can work. But in reality, from 55 to 85, you have another 30 years. So you're investing on a time horizon of 50 years. So the amount of risk you can take is going to go up and it's going to go down. But guess what? Over time, it's going to go up. And the money you will not make, because if you don't invest, is a huge amount of money. So if you compare with a solution, saving versus investing, you will see a difference. Can I take more risk? That's usually we would advise to talk to an advisor or a bank to really go into detail. That's why instead of telling you, should I go equity, should I go equity and bond, should I go into alternative investment and all those things, which are all relevant. The first question, what is my time horizon? How much can I afford to lose? And that will give you then which kind of investment. And then you get into much better conversation.
Now, final question before we leave, Laurent. What are some key final takeaways you would give individuals who are beginning their investment journey or early in their investment journey in order to ensure long-term investment success?
So the first thing, as I said, start using a solution like us. Sorry, I had to do it. But fundamentally, why? Because the first step is realizing when you need the money. As I said, time horizon is probably the first question you ask yourself. When do I need it? So I invest, meaning I put some money aside. Eventually, I want more money. And the question is by when? It's very simple. So I can invest in property. I can invest in a rate, maybe, because I have liquidity and it's already leveraged. So there are many alternatives. But the first step is understand your personal situation. You should not invest if you don't understand what you can afford and how it's going to help you. And this is the step, explore it, just do it simply. Then go step by step. And this is where you can start looking at, okay, what can I do? What is the difference? What does my little investment when I'm 25 make for my retirement versus 45? And if you take like something doing 7%, so doubling every 10 years, you will realize your $100 at age 25 is $400 at age 45.
Yeah.
Wow, that's a big difference. And so what we tell people is start now. Start understanding your situation and start regularly small. And in general, start talking to advisors, start talking to professionals, knowing that you have a tool allowing you to check what they're talking about. So you have the confidence that it's not product pushing, but it's really what you need. And so this is a journey, it's not a sprint. So get rich quick is not working.
Now, on that note, thank you very much, Laurent, for coming on the show.
My pleasure, Brian.
We've been speaking to Laurent Bertrand, CEO and co-founder of Better Tradeoff on Biztech's Personal Finance Show. This video will be on our Facebook and LinkedIn sites, as well as our website, www.biztech.asia. Please like or subscribe to our various platforms. Thanks for tuning in.